My name is Mike Sullivan. I'm a former IRS agent. I was a teaching instructor with Internal Revenue Service, and I worked at IRS over a decade. Welcome to my YouTube channel. My YouTubes are no more than 3 minutes. Thank you for listening. I want to talk to you today about the IRS maybe 504 notice that you've got the notice of intent to seize or levy your property or rights to property. IRS sends out a series of 5 notices, okay, to most people. The 504 gets everyone's attention because it's the first time they use the word seize or rights or properties or garnishments. And you don't panic when you get this letter. IRS is going to still send you another letter, the 1058. That's where you can file a collection due process, so you don't need to get all bent out of shape, lose any sleep. But this notice is meant and designed to get your attention. IRS doesn't want to levy you. They don't want to take your bank account. They don't want to take your wages. But these accounts are sitting there and they need to have them closed. This is a big wake-up call for most people. Most people freak out when they get that letter. They don't realize they have really another 60 days. But you have to start thinking right now on how you want to resolve your case, because IRS is going to levy and garnish if you don't do something. So what IRS wants to know is, well, what are you going to do about the debt? Well, IRS is going to require a 433F financial statement if it's in the service center, and an A, 433A, if it's at the local office. IRS is going to look carefully at the assets you have, your income and to expense ratio, and they're going to want to put you in this little box of these necessary and local standards that they have. That means that IRS is going to say, this is all we allow you to live on a month. That's where you got to be careful, and that's really why you have to hire a professional. If you're under $10,000, you could probably call them kind of with worry-free. But when your debt gets a little bigger, you want to, because IRS squeezes you in these boxes. But you know, people who know what they're doing can kind of expand that, so IRS doesn't take more than they have to. IRS, by the way, also has two usual programs that they use to close these cases. If you're truly upside down, you can't pay IRS, they'll put you in a currently non-collectible or a hardship. Those cases sit in there for a couple years, and IRS revisits them later. About 6.5 million cases end up in payment agreements a year. So at the end of the day, that financial statement is important, and so is your exit strategy and how you want to deal with IRS. So anyway, if you have any questions, you're welcome to call me, talk to your own professional. Thank you for listening today to my YouTube video.